All right, let's get a little S&P chart up while we're getting going here. All right, here comes the questions flying in. Brendan says, are there any quants or traders that are highly systematic on the Apteros desk? And what are your thoughts on Monte Carlo simulations? Are these simulations more useful to a systematic trader? Let me start. Well, I'll take your questions in order. There are no quants on the desk currently. I have a couple guys actually going through advanced group mentoring, AGM, who are very heavily on the quant side. I have another two guys who've just finished prior AGM classes who are very heavy on the option side. And my hope is that some of these folks become leaders on the Apteros desk in both the quant space and the option space as Apteros expands what it's doing beyond just outright intraday futures, occasional swing trades, stuff like that, with still intraday futures, or excuse me, outright futures. So no, not yet. We obviously have guys who use quantitative tools, myself included. I'll code up a big and or scheme thing to highlight certain conditions that exist on the chart so that I can kind of, just be a little bit more bionic in that way and be alerted, whereas my attention span's all over the place and I could miss things more easily, right? So, yeah. And then the second question, my thoughts on Monte Carlo simulations, are these more useful to systematic traders? They're certainly more useful to systematic traders in terms of they're going to be the only ones that run them, right? I mean, I guess you could just take a core edge or lack thereof in terms of win percent, average winner, average loser, and you could run some Monte Carlo simulations kind of based on those edges. I've seen people do that before, just to look at what are, what's the probabilities of over the next 200 trades, like what kind of variance in terms of return streams or drawdowns or whatever are kind of appropriate or might you experience. That's great. The reason I say that's great for a discretionary trader is really it comes back down to managing expectations, right? We've talked about this before on calls. What are the chances of a 50-50, 1.8 to 1 trader? I guess the 1.8 doesn't matter. What are the chances of a 50-50 trader having 6 losses in a row, right? Well, that's, 0.5 to the 6th power, right? So that's 1.5%, 1.6% if you round it up. So 1.6% of the time, if you're trading flawlessly and not being boneheaded and trading a great system, whether it's discretionary or not, or you're a systematic trader, you're going to experience those type of loss. I think that was 6. Let's round it up again. 2% of the time, it's going to happen. So simulations and seeing kind of like the where returns can be really powerful in terms of just almost mental framework, managing your expectations for wins and losses as they show up or don't show up. So it can be a really helpful thing just to kind of explore, even if it's not something that's remotely integral, as it would not be for me to like developing a process or any of that kind of stuff, right? It would just be informational. V asks, question about delta divergence. If price is taking out high of day, but cumulative delta is nowhere near the high of day, I consider that a weak long, since passive longs have built a position and they aren't aggressively taking out the offer, which is what I'm looking for as a breakout trader. Is that a correct read on my part? Let me read it again just to make sure I'm on it. So we have price breaking to high of day. We have Delta not doing so. Obviously, we have a lack of aggressive buyers. Therefore, it's probably passive longs. Here's what I'll say. So yes, your read is correct. Your read is correct. Here's what I'll say though. As the S&P test kind of, we'll watch maybe a couple levels here as we do this. So 1550, right, is one. Then we got like 87 to me is kind of where we're pinned in here right now. And you can see that actually on the volume as well. It's kind of from really this 1.5 days there, but it's kind of where this market has gone. So to me, to retest an I period high here is potentially significant. So that's right at RTH VWAP for the session as well. Poor low on the session. See that EF period down here. So, you know, this is the things I'm mentioning here are a recipe for that not being low of day. I'm not short the market or anything like that. I still have, I actually got out of all my futures in my swing trade, you know, at much higher prices well before this news hit today. But I am still swing long the S&P. It's just via the options that I've had on since, you know, a couple weeks or whatever. Okay. Here's the thing that I will say, V. We've seen markets that have gone lower on passive activity, right? Lack of aggressive activity. We've seen markets that have gone higher, again, passively driven, much, much more frequently this year than we've seen in my, you know, decade and a half, right? I haven't been watching Delta for a decade and a half, but, you know, I've been watching Delta since, I don't know, 2010, 2011, something like that. Maybe like 12 or 13. Anyways, so that's actually almost 10 years. So a decade of watching Cumulative Delta. I've not seen it like this, right? There's certain markets that have historically behaved more like that, right? But in the general US indices, we're seeing more of that type of behavior. We could speculate as to why. At the end of the day, it doesn't truly matter why this is the market that we're seeing. So I would one trader, and you know, he's got a public journal in our community and whatnot. Zero is who I'm referring to here. He's also a trader on the desk. You know, he in the past, he doesn't do this so much anymore, but in the past, he's really focused on categorizing the day, whether it's kind of a passively driven day or an actively driven day. So he tries to get a good fix on that and then use Delta differently based on what Delta environment he's placed the day in, right? And so maybe for you, if you already see, wow, this is just a passive day, passive day, passive day, that could actually be a confirmation if you see more nice passive buying to go with your breakout, right? So it's not necessarily that it's a weak breakout. There's not really strong buying. That on some days just may not be the cold hard facts. Historically speaking, your read is correct. And that is much more so of what we'd want to see for strong breakouts. I mean, think about today, right? I mean, we never really got past 10K, did we? We just blipped. Yeah, that's a barely a blip below 10K, you know, just after 9 a.m. And then all those new lows that we put in, that kind of grindy movement just below 4,000 in the S&P, you know, these D, E, F, G, H period lows that we're looking at here, that was on, you know, passive selling Delta there as well. So anyways, great question though. Those are the things to be considering as you think, is this a quality breakout or is this a breakout I want to pass on? That's always a really good thing to consider. Denise says, hey, Merritt, sometimes when the market starts to accumulate on the edges of my CVA, it could be hard for me to decide what to do. What do you suggest me to do? Well, I take it you're not a student, but the first thing I would say would be to follow our laws of market dynamics. So depending on where we've come from, where the acceptance picture is changed or not changed, that tells us, do we have some form of a directional bias, let's say, against one of the edges of those CVAs? We may or may not. So that's the first and foremost thing. And then we get to the very last law, which is kind of a law 10, a compression type law. Think of it like, hey, we should be leaving this area, but we're not, right? Which is kind of what you're alluding to. So there are times where we can go to, okay, we have a law 10 type compression play here. And we can actually, it's the only time in all of NADRO type trading where we actually front run the acceptance picture and what in trading what is. It's the only time we say we've got a crystal ball and we're going to trade something we think will be. The rest of the time, so what you should be focused on doing 99% of the time, even if we are hanging out and accumulating at the edge of a CVA, you want to follow what is. Don't guess what's going to be. Don't think, well, we've kind of spent some time here and it, you know, and now all of a sudden you're playing a guessing game. Focus on what is, trade what is. I hope that makes sense. I talk a lot about trading what is. So to me, maybe that phrase carries more weight. So Denise, if you need more follow-up on that, just hit us up in the chat. So a couple questions in the chat. I'm not taking questions in the chat. If they're follow-up, we'll definitely do that. I take questions first come, first serve in the Q&A. Hussein says, Merritt, what do you say about POC shifts intraday? I don't really monitor them much at all. I know, you know, I've certainly known traders in the past who monitor not POC shifts, but VPOC, right? VPOC shifts throughout the day, looking at those as kind of, let's say, for example, we're trending higher, VPOC is stepping up. They look for those as kind of a support, you know, some people use VWAP and things like that. I don't really keep up with them. I keep up with in a much more general sense, right? So let's take today. Let's collapse this profile back. I don't really care that the VPOC is here at 4,004. I don't really care that the point of control is here at 4,008. What do I care about, right? What do I care about? I care that this is excess. This is balance. And I note, as I did earlier, that there's a lack of excess at the low. Right? So I'm not getting as granular, perhaps, as a lot of people with some of the profile type stuff. I look for balance, I look for excess, and I look for lack of excess. And if you do that, you're really going to be served very well, because one of the main benefits of market profile in particular over volume profile even, is the fact that it grossly simplifies the day's market data for you. It grossly simplifies it. And guess what, guys? Do you tend to overthink things or underthink things? Well, for most of us, we overthink things. So guess what? A tool that simplifies data into a very much more black and white picture, not like most people teach market profile. Most people teach market profile as this ambiguous, oh, look, this probably is short covering and blah, blah, blah. And here's what we think which participants are doing this or that and who's in control. No. I use market profile as a very black and white. Tell me what is the condition, what's going on, where's their excess, where's their not, where's their balance, right? As one piece of the puzzle within the overall framework. Cohen. Hey, Merritt, could you please explain your recent tweet, about the ES swing trade being a mean reversion and not a trend play, and what this means for the trade idea? Great question, Cohen. We'll stay on our little the tool to see market profile in the platform that I'm using is called what's it called? TPO, right? TPO market profile. I forget the name of the indicator. It's called I know it starts with TPO profile chart. So that's on Sierra chart. If you're using some other platform, Beverly, you'll have to figure out, but it's going to be called TPO or market profile, something along those lines. Where was I? Oh, all right. So let's pull up the tweet. I retweeted it earlier. All right. So here's quote. And when did I make this? The 12th. That was yesterday at 9 a.m. So this was before we got to 4160. Quote, don't forget that this large move up in equities is a mean reversion play, not a trend play. 4160 is the most traded price for this year. So I gave a level, I gave a time frame, and I gave a concept, right? Except it was a concept first, and then a level, and then a time frame. So what I said was for this year, which we've kind of had, I'm just going to draw in this upper box over here. For the year, we have a profile that looks something like, I don't know, this. Okay. This is the most traded price. It's 4160. And the S&P has traded down and then kind of stabilized, and then oops, I was drawing too much information. Anyways, it's traded down into near the lows of the year, and it has run up, and I made the tweet about right here. And so what a lot of people see the latest, 1, 2, 3, 4, 5 days of uptrend behavior, which it is an uptrend on some time frames, right? But not the time frame I'm talking about, which is why it's important that I included the time frame in my tweet. So if this, we've traded from all the way up here, all the way down here, and everything in between, and this move upwards at this point in time is simply a reversion back to this most traded area, right? That's different. That's different than breaking out to all-time highs, and then we're kind of definitely uptrending relative to where we've been. This is an uptrend that's relative to, I shouldn't say it that way. This is an uptrend that's heading back towards where we've traded the most. And guess what? As in true Nadro, beautiful market behavior, we tagged 4160 just as you buy the rumor, sell the news, right? Just in front of the number today, boom, we see what the inflation numbers are, and then it's, all hell breaks loose from there. But the market accomplished exactly what it needed to accomplish just prior to that big event. So, me reiterating that today was really, it was really a big, I told you so, right? Because the implications are, this isn't an uptrend, boys and girls. That was essentially what my tweet said. This is not an uptrend. This is a move back, reverting back towards a mean. There are different implications if you understand market profiling. if you understand profiling, auction market theory type stuff, you understand that a reversion, right, responsive behavior back towards a high volume area is not the same thing as initiative behavior away, right, where you start to trend and go try to find value somewhere else. Those are very different things. And so in the case of, and again, different things are happening on different time frames, right? What if we pulled up a 1 second chart? Well, guess what? Maybe there's a volume profile here and we're trending away from it versus a daily bar chart, right? Magnitudes, different worlds there, you know? I forget if I did this in the NADRO course. I think I did, but I talk about like market, like views from different participants in different time frames. Imagine you have a stream and you are a tadpole in the stream, right? What do you see? See some rocks and with some little algae growing on it on the bottom of the stream. And you see like a big largemouth bass that you're terrified of that's going to eat you, right? Think about that perspective at that exact location on Earth. And then just think about like an anthill outside the stream and the perspective of the ant. Think about a hawk, soaring over that field or scouring that field looking for a field mice, or maybe that largemouth bass. And the perspective they have of the wooded tree line and the field and the stream and the high point of the elevation where the stream is trickling down from. What is that view relative to the tadpole's view? Are one of those views wrong? Is someone stupid or blind or can't, understand it? The hawk's not seeing the algae on the rock, and the tadpole can't see the tree line. Okay, but they're all truths. So this is really, really important about markets and timeframes. Hey, is AGM starting next week? I think so, Kevin. Are you on the group? Are you in it? Let's get it. Let's get into it. I'm wrapping up current AGMs and I'm awesome. Good to hear. I'm not a very organized person, so you'll hear from me sometime before that start date. We'll say, hey, these are the groups. Let's get our private group chat on the community site going. It's a thread that we'll use for everything, trader views, all that kind of stuff. And then we'll set up our I'll propose a meeting time, our weekly meeting time, and we'll kind of fill that out with the group and make sure we find something that works for everyone. And then we'll have an introductory meeting and then we will get into it. So in this scenario, the implication is that likely destination is the 4160 and not traversal in the yearly. No, both things are true. Okay, both things are true. I absolutely think that, and again, I'm still in bullish options in the S&P despite this sell-off, because the sell-off doesn't change anything contextually for me. So Cohen, you're correct that my expectation is S&P 4,400, 4,500-ish, right? That's kind of what the market's telling me right now. Now, do we have some hurdles now? Do I now have some bear zones in the 4070 to 4060 area, right? Yes, we do. This is now a major hurdle, right? This is a bear zone. So again, you want to be a tadpole? Do you want to be a hawk? There's no, it sounds like obviously everyone says, well, I want to be a hawk, well, no, that's not true. The tadpole in this case is a scalper, right? And they're cool too. The hawk is more of, let's say, an intraday position trader. And then you've got like some astronaut in outer space or something that's like the real, looking at the full picture. They're the swing trader, right? What was I going to say? I was going to say something. There was more follow-up questions. So yeah, I mean, you want to understand from a profile perspective for the year that was a reversion and that was just a small destination, right? But absolutely, beyond that, let's say looking at the yearly value and whatnot as it develops, right? And we focus more on edges of value than we do points of control, then absolutely, as I said, I've still got skin in the game long here. I just peeled off of stuff, sold, some options, got out of all the futures, all that kind of stuff. Because look, we had traversed quarterly, like we were really hitting multiple extremes on multiple time frames. So it made, as I take a look at my cycle of DMIs and no DMIs, right? I didn't stop doing the DMI again. There's been no DMI because there's no, like, as I tweeted a few days ago, as usual, what did I say? Something about probably like, look, the spectrum of opportunity, it continues to ebb and flow. We had really nice opportunity at the lows. We don't really have opportunity up here at the highs, right? You're just chasing things way too high at this point. So anyways, how are we doing on time? 5 more minutes. Oh, I think Denise had a follow-up somewhere in here. Follow-up to a question. The thing I actually need to do is just leave the CVA and look for a new one. I hope that's not doing anything wrong by posting a link. I'll click a MJUR link. I'm not afraid of those. Let me ask so the thing I need to do is just leave that CVA and look for a new one. When there are multiple days that balance, right? Not just one day, but multiple days is my rule of thumb that balance above and below an edge of a prior edge of balance. I cut off the old one and I start a new one, right? So that's my rule of thumb. Hey, Merritt, how far are you looking back for scalping last 3 or 5 days or so? Do you also check like high time frames, 1 to 3 years volume profiles? No, I don't really look at, I don't look at a lot of volume profile in general. I did mention that yearly level, but it was also, if it would have just been the yearly VPOC, I probably wouldn't have mentioned it, but it was confluent with some other destination areas that I look at. So I thought it had extra confluence, which makes it stronger, right? So it's not just that. But do I look at anything beyond that 1 year profile? No, I don't. In terms of higher time frame. But how far am I looking back scalping the last 3 to 5 days? Last 3 to 5 days, I've been more in swing mode than scalping. I did scalp some today with futures because I wasn't in future swing, and obviously there was good downside and some decent rotations and whatnot following the news this morning. So I did scalp some today, but I mean, I'm taking into account all my contextual reads when I scalp. I just have a different priority system when I scalp as to what references I'm listening to the most to make those quicker decisions. So anyways, hope that helps. I haven't been scalping a ton the past 3 to 5 days to answer your question simply. And Naki asks, could you walk through your thought process on the DMIs of September 6th, 7th, and the reasoning of taking the swing longs at those levels? Naki, I'll absolutely do that inside our community, not on the public facing webinar. So hop over to the community, start a thread. In fact, don't even start a thread. We have a thread for any discussion amongst you and your peers, or bringing me in to get involved. Merritt, what was your thinking on this DMI? We've got a place for you to do that. All right. There was a couple questions in the chat because that's the last Q&A question. Can you post the link to the stream into general real-time posts? I don't understand that. Do you put more weight on RTH VWAP or the entire session VWAP, or do you watch them equally? I'm typically more interested in ETH, unless, perfect example, day like today. What happens on a day like today is that the VWAP starts, right? And then all of a sudden it does this, right? Like the variance from VWAP and whatnot, right? So it gets really blown out from kind of where VWAP is. And so to me, when we have huge pre-market moves, a lot of times I'll then say, all right, here's the pit session open. Where is this? Where is the RTH? What is it doing, right? And I'll focus a bit more on that, as I did today, right? First, we were rotational RTH. Then we had a nice little like kind of VWAP hold or attempt on a really like bear flag type behavior that took us to new lows. We tried to again have like a lack of bounce, but this is on a lack of selling into those lows like we talked about earlier. That then failed, right? And we go rotational, which leads us to exactly where we are now, kind of bouncing around in that that area that I first drew on the chart, this here to here. So when you get a huge move just before the open or something like that, that really blows out the VWAP, a lot of times I'll look at the RTH. All right, guys, I got to hop on another call. Cheers. Great questions today, per usual. See y'all.